Hi guys, it's Marissa here for another session of Facebook Live with Rise High, and really glad today to be joined by our wonderful broker Corey Sermon. Thanks for joining the show, Corey.
Hello everyone.
So today we are talking about where is the best place to save your money. And specifically we're going to be going into the detail of redraw facilities and offset accounts, and really looking at the pros and cons and really analysing these types of facilities where you can actually save your money. So really glad that Corey is here to join us. He's really good at saving his money and really understands all of these elements to discuss today. So really glad that he could join us today. Before we get into the session, I just want to raise the fact that we've got a seminar, property investment seminar coming up on the 24th of May, which is all about cosmetic renovation, subdivision and development. So if you are interested in any of those topics, then please do register on our website. We've only got a few spots left. Tickets are going fast for that. It is free to attend, but you do need to register to secure your seat. So hop onto our website and do that. Now, over the course of this segment today, we will be answering your questions. We've received quite a few questions through the week in relation to offset accounts and redraws. So we're going to be answering all of those questions today. And you do also have the opportunity to provide a question or a comment during the segment. So you can either leave a comment or question in the comment section below, or you can email Amanda at risehigh.com.au. And if you want your comment or question to be anonymous, then that's fine too. Okay, so let's get into it. Corey, what do you reckon?
Yeah, no worries.
Yeah, awesome. So look, we're going to start by just talking about redraw, I think, because Jessica wrote in through the week and she specifically wanted to understand, well, what is redraw and how does it work? So let's just start with that.
Okay, redraw is the ability for you to draw funds out of your home loan when you've paid over and above the normal repayments.
Yep, awesome. So I guess just to put some numbers behind that, if your repayment is $2,000 a month and you're consistently paying $3,000 a month, then you'll be able to build up some available funds in your loan.
Yes.
And then take them out.
Yeah. Yep. Generally with no charge.
Yeah. So when is redraw a good thing to use in your loan? Like what?
Perhaps I would say when you're a first home buyer or have a limited ability to save, I would say it's probably a good situation. And
I guess if you do have a home loan and that's the only thing that you've only got a home and you don't have any investment properties, and maybe you're saving for a holiday.
Yes.
Or saving to buy a car, would you recommend people to save the money in, a high interest earning savers account, or should they save it in their home loan potentially and redraw it out?
I would say in the home loan, in a redraw facility would be a great way.
Yeah.
Yep.
Well, when would you say is not a good idea to use redraw?
Probably when you've got limited ability to save, or you are an investor with multiple investment properties.
Yeah, because redraw can get a bit funny when you've got investment loans.
Yes.
Because if you're redrawing out of an investment loan for personal use, like say for example the holiday or the car, that could affect the interest tax deductibility of that loan. So redraw can be okay to use if it's just a pure home loan and you know that property is never going to be an investment property, but it gets a bit murky if you've got investment properties and investment loans, and probably a good idea to steer clear of that feature in those situations.
I agree with all
Would you agree?
Yes.
Yeah. Okay, so I guess that sort of summarises the pros and cons of redraw. I want to spend the majority of the show today talking about offset accounts because I think offset accounts are a wonderful innovation, and we take them for granted in Australia because a lot of our banks offer offset accounts, but overseas, many of the banks don't actually offer offset accounts. So it's really actually quite special that we have them in Australia. So it's good to know how to use them properly and what we can do with them. So let's talk about offset accounts.
No worries.
Emma actually wrote in, she wanted to know what an offset account is and how does it work. So let's start there.
No worries. An offset account is an account that's linked to your home loan, where surplus funds offset the interest in the loan itself.
Yep, that's right. So let's just put an example out there. So if you've got a loan for $100,000,
yes, and if you had
let's say you've got
$10,000 in your offset account, you'd only pay interest on $90,000.
Okay, so instead of paying interest on $100,000, you pay interest on $90,000.
Yes. Yep. Definitely.
Awesome. Clear, hopefully. So Stephen actually asked, if you have money in your offset, how do the repayments work if the loan is interest only versus if it's principal and interest?
Okay, if the loan is interest only, basically you will get matched dollar for dollar. So say if you had $10,000 in your offset account at a conservative interest rate of 4.5%, you'd probably save yourself about $450 a year.
Okay.
I would say.
So about $10,000 sitting in your offset account on average throughout the year would save you about $450 a year.
Yep.
That's pretty good saving. It's better in your pocket than in the banks, isn't it?
Yeah, definitely.
Yeah. So when it's interest only, you only pay the interest expense of the loan, basically.
Yes. Yep.
So what that would mean then, as your offset balance is fluctuating, so too would your loan repayment.
Yes, definitely. Yep.
Yeah. Okay. So let's talk about the P&I option, which is principal and interest. So if you've got a loan that is principal and interest and you've still got the offset account, how does that work?
Okay, with principal and interest loans, all funds in your offset account, your minimum repayments would still stay the same. However, you would be chipping away at more of the principal of your loan, thus paying the loan off a lot quicker.
Okay, so just to put that in another way, the loan repayments for a principal and interest loan would be based on the loan limit.
Yes,
rather
the original
than
loan.
The original loan
Yes.
limit, and would not fluctuate.
No,
So
no, generally not.
if your repayment is $2,000 a month, it would remain $2,000 a month, whether you've got $1 in the offset account or $20,000 in the offset account,
Yes.
it would be the same.
Yep.
But what you're saying is the more money you have in the offset account, the larger portion of that repayment is going towards paying down the principal of the loan rather than going towards the interest.
Yes, and thus paying the home down sooner as well.
Yeah, so basically you're paying off your loan faster.
Yeah, yep.
Yeah, so
That's a
that's
good thing
also
about it.
a really good option. A few shout outs. Shout out to Vanessa, Rue and Richard and Sarah. Thank you so much for tuning in, guys. Really appreciate it. Hope you're getting value from today. Let's move on to the next question. Scott wanted to know whether it costs money to have redraw and whether it costs money to have an offset account.
Offset accounts do generally come at a cost. They're roughly around $395 from most
Is
lenders.
that because you generally have to be part of the professional package with
Yes.
most lenders?
Yep.
There are some exceptions to that though, aren't there? Some
Yes, there are some.
lenders
Yep.
that have offset accounts with basic loan products.
Yep. However, if your offset account is linked to an investment loan, you could claim back that payment with your tax.
Yeah, fantastic. Oh, the fees, the bank fees. Yeah, awesome. And redraw's generally free with most
of the time,
loan
yeah.
facilities. But it is important that if you're planning to use that facility that you do ask that question,
Yes.
I guess,
Yeah,
before you
very
get your
important.
loan product. Because whilst the facility might come free, for the redraw, it may actually cost you money to take the money out when you want to take it out, depending on the loan product and the lender.
Yeah,
so,
some have different criteria, like they generally might let you have the funds out at a certain time of month.
Yeah.
Every lender's different, so yeah.
Yeah, so that's an important thing to check. So hopefully that answers your question, Scott. So this question is from Sam. Sam wanted to know, when is an offset account a good idea?
Okay, offset is a good idea when you've got surplus funds, you've got significant savings, ability to save is quite good. Also for someone that is self-employed, that may pay their GST and their tax annually or quarterly, it's a good idea to stack those funds in your offset account until they're due to the ATO and just have your money working for you in between that period.
Yeah, and the thing that I love about offset accounts personally is that because interest is calculated daily on the loan, it doesn't really matter whether the money's sitting in there for one day, and then it has to go out of the account. It's always working for you. And I love the feeling that every dollar I have is working for me.
Yeah, definitely.
Offsetting, the interest that I'm paying to the bank. So, yeah, do you find that as well?
Yeah, definitely.
Yeah. And it's amazing how much the benefit can add up over time. Like if you are saving for a holiday or saving for a new car or just saving for emergency savings or rainy day savings, it can really make a big difference.
Yeah, for sure.
Over the scheme of things.
Yeah, and everyone likes to save money on interest.
Oh, absolutely.
Definitely.
The less we can pay the banks, the better, hey?
Yes, always.
So Megan actually had a question. Megan said, is an offset account better than a high interest earning savings account for the savings?
Yes, well this is a case of interest saved versus interest earned. And the interest rate on your loan will always be far higher than any high earning interest account, probably by at least 1 or 2%, I'd probably say. So any money that you're going to use to save interest on your home loan, you'll be way better off than in a high earning savings account.
Because it can be a bit deceiving, can't it? Because when you put your money in a high interest earning savings account, you feel excited because you're getting some interest paid
you see
to
it
you.
sort of coming in.
Whereas when you keep it in an offset account, you're not getting any interest like credited to your account, but you're saving interest off your loan.
Yes.
So you're actually saving a lot more than what you'd make.
Yeah, it's a bit of a misconception there, but you're definitely better off with offset.
Definitely better off with offset.
Yeah.
So hopefully that answers your question, Megan. Erin wants to know, can you have multiple offset accounts offsetting the same loan?
Yes, you can, but not with all lenders, so you want to sort of check that out first. I do like a multiple offset setup myself because it gives you the ability to perhaps have one separate account for your bills if you like to be able to manage things like that. It's a little bit easier, I think.
Yeah, I also really like it as well. In particular, if you're someone that can save a lot of money, because I don't like having a huge account balance with the main account that you carry around your ATM card for.
Yes, just to be
just
safe.
From a security perspective. So, you know, I find that it's really nice if you can have one account that's your everyday account that just has a small account balance in there. That might be, you know, your income comes in, your bills get paid, and that's your ATM card. But then if you've got a large amount of savings, it's good to have that in a separate account. Do you agree?
Yeah, yep.
And the other thing that I personally love is, you know, I've been saving the kids' money that they've been getting from, you know, christenings and birthdays over the years. So I've had one offset account allocated to my daughter, one offset account allocated to my son, and it's nice to be able to separate all those accounts but still know that they're all working to offset the home loan.
Yep. Yeah, it's definitely a good way to go. If you can get it, just check with the lender because not all do multiple offsets.
Yeah, that's right. So that's great. Well, hopefully that helps you, Erin. Shane would like to know, can you have an offset account against a fixed rate loan?
Yes, you can, but once again, not with every lender. Some will allow you to do it, but you want to just sort of check the fine print and make sure that they will allow you to do that.
Yeah, and sometimes they claim to be offset accounts, but they're not 100% offset.
Yes, and that's very important. You definitely want 100% offset.
So you need to really just check on that. And also sometimes you can pay a premium in the interest rate for a fixed loan if you want to have an offset account against it. So you sort of need to be aware of that too.
Yeah, and weigh up the benefit.
Yeah, okay. Shane, hopefully that answers your question. Julia, how can you use an offset account to pay down your loan faster? We sort of already covered that, but let's cover it again for Julia.
Where if you've got money in your offset account and it's principal and interest, like we were saying earlier, basically you're paying down the loan quicker because there's more coming off the principal.
Yeah. Just a shout out to Sally, Tom and Harry. Thanks for joining in, guys. Really appreciate you taking the time to join us. Finally, we have a question from Kelly, and she just wanted to know, overall, is it better to save your money in your loan and access it via redraw, or to use an offset account to save your money? And I just thought this was a nice, well-rounded question to summarise today's discussions of where people should be saving their money when they've got a loan. So
yeah, I think it depends on your individual scenario. I feel if you've really got surplus funds, I think offset is a very good way to go.
Yeah, okay, excellent. So definitely a fan of offset then.
Yeah, yep, for sure.
Yeah, I'm also a fan of offset, and they work, I think offset accounts can work really well.
They're excellent. When used the right way, very, very good.
Yeah, awesome. Well, I think we've covered quite a bit today, and I think that one thing that I would like to add to that is that it's really important when setting up your loans that you are getting the right personalised advice for you, and you know, you need to make sure that you're only paying for loan features that you're going to benefit from. So like Corey said, you know, often there is a charge associated with offset, but in many situations the benefit will outweigh the charge and the cost. So it is really important to understand and to sit down with your Rise High mortgage broker to work out what is right for you and what is going to work for you and your family, and the way that you earn and spend money to make sure that you're getting the most out of your bank accounts.
Yep.
So I reckon that sort of sums it up.
No worries.
Before we wrap up, just a quick reminder, we still have a few spots left for our subdivision and development seminar on the 24th of May. So you can register your place on our website, risehigh.com.au. And also, if you are interested in property investment, encourage you to like our Rise High Investor page. And of course, if you are interested, we've also got our Rise High Accounting page as well that we'd love you to like on Facebook. So thanks for tuning in today. We hope you've had some value from today's session, and we look forward to seeing you next month. Thanks. Bye.
Thank you. Bye.